Welcome to Gaming Feed, your channel for everything related to the gaming industry and the financial markets. And thank you that you are watching my video. So you did a great choice on how to analyze video games companies. So this is my ultimate video about the way how you analyze a video games company. So in comparison to other companies, so it depends always on the sector a company is in, and you should for a specific sector you have to take specific metrics into account. So this video, my friends, I have like over 30 slides, so this is going to be a little bit more professor style here, a bit more school style, university style, but I hope you're going to enjoy this. And at the end of this video we will have a case study. So we take one of the most important publicly traded gaming companies into account, and we're going to analyze it specifically. Then I would say, my friends, let's start. Alright, so when evaluating the success and potential of a video game company, a thorough analysis of various key metrics is essential. These metrics provide a detailed view of the company's financial health, user engagement, game performance, and overall industry positioning. In a dynamic and highly competitive market, understanding these indicators, my friends, helps assess a company's ability to generate revenue. This is what we want because we're stock investors. Retain players and maintain profitability. From financial metrics like revenue growth and profit margins to user engagement measures such as daily active users and retention rates. So we'll be going to go into details of this. Each metric offers valuable insights into different facets of the business. By examining these areas, shareholders, stakeholders can make informed decisions, and this is very important. We want to make informed decisions, and you know my videos about charts, but here this is about the fundamentals. So sometimes people say, yeah, Mr. Orange, you have to look more into fundamentals. That's what I'm doing, guys. So informed decisions about a company's current performance and future prospects, because this is what you buy for a company. It's always about the future in the evolving gaming industry. So first we have the financial metrics, my friends. And in the financial metrics we have the revenue and the revenue growth. So this is probably one of the most important ones because you want to earn money. So the definition: total income generated from game sales, in-game purchases, subscription, and other sources. Why does this matter? This shows overall financial health and the demand for the company's products. So company's games, for example. Revenue growth indicates expansion, so getting bigger, either through existing games or new releases. How to analyze this? Compare year-over-year or quarter-over-quarter revenue growth to assess a trend or assess trends or a trend. Strong growth suggests successful products or monetization strategy. So, makes sense, guys. So next one is gross margin. You have to look at the gross margin. The definition is revenue, cost of goods sold, and then slash revenue. So revenue minus cost of goods sold slash revenue. And then you get the gross margin. This ratio shows what portion of revenue remains after covering direct costs associated with the production. Why does this matter? A high gross margin means the company efficiently controls its production costs. That's important because you don't have indefinite money, allowing more room for marketing, research and development, and profit. Profit is, again, very important because we're shareholders. How to analyze? Compare to industry peers to evaluate cost efficiency. So you take, for example, a Nintendo and you take a Capcom. Higher margins are, or even better, you take a Square Enix and a Capcom because both are only making the software and not the consoles. Continue. Higher margins are generally more favorable, particularly for companies with scalable digital products. So digital products, I mean, buy a license, you don't own it, check out my other video I made about this subject, of course. Another financial metrics is the operating income and EBITDA. So you heard about EBITDA often, I guess. So operating income is revenue minus operating expenses. This is the operating income. EBITDA is earnings before interest, taxes, depreciation and amortization. Why it matters? These metrics measure core profitability, excluding certain expenses that don't reflect day-to-day operations. EBITDA is especially useful for comparing profitability among companies with different tax rates. That's important because you have a gaming company in France and you have a gaming company, let's say, in England or in Luxembourg. So, with different tax rates or depreciation policies. How to analyze? Look for consistent growth in operating income and EBITDA, as this shows effective management and strong business fundamentals. Next financial metrics is the net profit margin. The definition, net income/revenue, showing the percentage of revenue that becomes profit after all expenses. Net profit margin. Why does it matter? Indicates overall profitability. A higher net margin shows the company's ability to convert sales into actual profit. Very important skill. How to analyze? Assess alongside revenue growth to ensure the company is growing sustainably and profitably. Net margins can also be compared with industry average. So therefore you need to find out the industry averages, of course. Next financial metric is free cash flow. Yeah, we like money. We are like companies that have a little bit money on the side. So we shouldn't forget this, my friends. Oops, here. Operating cash flow minus capital expenditure, CapEx. Why does it matter? Free cash flow, FCF, represents the cash available for dividends, debt repayment, or reinvestments. Positive free cash flow indicates good liquidity and financial health. How to analyze? Compare free cash flow to net income to assess the quality of earnings. Consistently high free cash flow is a positive indicator of sustainable operations and future investment. So you want the companies to actually make money and not just going into debt all the time. Then the second huge metric is the user engagement metrics. The different user engagement metrics. So there we have the monthly active users. You abbreviate this with MAU or MAU in English. Daily active users is DAU. Definition MAU is the total unique users in a month, while DAU counts unique users per day. Why it matters? These metrics provide insights into the scale and the stickiness of the user base. High MAU and DAU indicate strong player interest, so people continue playing. How to analyze DAU-MAU ratio, also known as stickiness ratio, so like this you remember it better, can indicate user retention and engagement. A high ratio means players are returning frequently, and then there is some room for selling them something. So the second one is average revenue per user, ARPU, total revenue / total users. This metric shows how much revenue is generated per active user. Why it matters? ARPU helps measure monetization effectiveness and is particularly useful for free-to-play F2P games and subscription models. How to analyze? Compare ARPU across different games or regions to identify where monetization is strongest. Track changes over time for insights into evolving user spending behavior. So how much do they spend? So what is the behavior here? Next one, retention rate. For example, 1 day, 7 day, 30 day. Definition, the percentage of users who return after a specific time period, the next day, a week, or a month. Sometimes you play a game and you're not returning the next week. So this is the retention rate. Why it matters, high retention rates suggest players enjoy the game and are likely to continue engaging with it. Low retention may point to issues with game design, content, or difficulty. So like my problem with Wukong. So I've played it last time 1 week ago. How to analyze retention rates for various periods to gauge initial and long-term player satisfaction. Compare retention rates across different games to identify strengths and weaknesses. So those elements are important, for example, for free-to-play games or for games like multiplayer RPGs. Session length and frequency. Measures the average duration of a gameplay session and the frequency of sessions per user. Why it matters? Longer and more frequent sessions indicate high engagement and suggest the game is immersive. How to analyze, monitor changes in session length and frequency over time, especially after updates or events. Compare session metrics with user retention to assess overall engagement. And people say, I don't want games that are always online. This helps a little bit to get those metrics. Therefore, we see that some of those games are sometimes always online. Then we have the third metrics. The third metrics or third group of metrics is the game performance metric. So in-game purchases or microtransactions, so everyone loves them. Just kidding. Definition, revenue from virtual goods, upgrades or services bought within the game. Why it matters? For free-to-play games, in-game purchases are often the main revenue source. High microtransaction revenue indicates effective monetization. How to analyze? Track in-game purchases over time, especially in response to new items or events. That's very important. New items and events. Segment by user demographics for insights into purchasing patterns. So this is something what the company needs to do to better understand how the game performs. Then the second one is game downloads and installs. Total downloads or installs of a game across platforms. Why it matters? High download numbers suggest strong initial interest. Sustained download indicate ongoing demand. That's for free-to-play games, again, very interesting. How to analyze, track downloads by region, platform or time frame to identify trends. Compare to active user metrics to assess how many players continue to engage after downloading. Next one is the churn rate. A churn rate. This is the percentage of players who stop playing within a specific time frame. So they churn. They don't want to play this game anymore. Churn reveals how many players are leaving, helping identify potential issues. A low churn rate is desirable as it suggests good player retention. How to analyze, calculate monthly or quarterly churn rates and compare them across different games and updates. Sudden increases in churn may signal problems with updates or gameplay changes. So this is also important for the companies to understand if their game actually has an issue. Monetization metrics. So I hear already the hardcore gamers saying, no way, Mr. Orange. Yeah, but here we are now about the gaming industry channel, my friends. Lifetime value, LTV. The estimated total revenue generated by a user over their entire lifespan in their game. Why it matters, LTV is crucial for assessing long-term profitability and sustainability. It's especially important for companies with higher user acquisition costs, like in mobile games, for example. How to analyze, compare LTV with acquisition costs to ensure profitability. Analyze by player segment for targeted marketing or monetization strategies. So I just think about like when I play Call of Duty and I buy this battle pass each time a new one comes out. So then they can see how much money did Mr. Orange spend for this, for Call of Duty overall. Monetization metrics. Another one is cost per install, CPI. The cost to acquire a new player through advertising. So this is important for mobile gaming. Why it matters, CPI reflects the efficiency of user acquisition efforts. A low CPI relative to LTV indicates effective marketing. How to analyze, compare CPI across campaigns and regions to optimize marketing spend. Track CPI over time to identify changes in advertising costs. So, for example, if you advertise your game on Steam and no one buys it, if you advertise your game in in Kotaku, no one buys it. So maybe you should not advertise there. Monetization metrics, conversion rate, the percentage of users who make a purchase or subscribe. This is the conversion rate. Higher conversion rate indicates successful monetization strategies. Track conversion rates over time and by player segment. Compare conversion rates across games or marketing campaigns to identify best practices. Next one is are the product development and IP metrics, my friends. Game pipeline and IP portfolio. So the roster of current, upcoming and past games. I talk often about the upcoming games. I talk about the back catalog, past games, and the current. And the current game is always the game that triggers my interest to cover, for example, a company. Along with proprietary franchises. Why it matters, a strong pipeline and valuable IP suggests potential for future revenue and brand strength. So Ubisoft, for example, has this a lot. How to analyze? Look for major releases and established franchises. New games in the pipeline indicate growth potential, while existing IPs provide reliable revenue streams. Next one is development time and costs. Thinking about Cyberpunk. Total time and resources needed to create a game or like Concord. Why it matters, long development times and high costs can delay profitability, while efficient development suggests good management. So all no-brainers, my friends. Compared to industry averages, track time and cost efficiency across different types of games or genres. So if some indie developers spend their whole life to create one game and it sells not good, then you have a problem here. User feedback and community engagement, so reviews, rating, player feedback on various platforms. Why it matters, positive feedback indicates player satisfaction, while community engagement forums, social media reflects brand loyalty. How to analyze, monitor feedback for recurring issues, track community size and engagement across platforms to gauge player interest and brand reputation. So sometimes some games have, or some companies have terrible reputation, but still their games are selling. So what do you want? Do you want good reputation, but no one buys your game, or you want terrible reputation and people buy your game? Industry-specific metrics. 6, market share. A company's revenue as a percentage of the total video game market. So here, Nintendo might be interesting, or Sony, or Xbox in general. Higher market share suggests competitive strength and influence within the industry. Compare market share trends with competitors. Look for growth in specific segments, such as mobile or console gaming. If I would look now console gaming, I would look at the Xbox, I look at the PlayStation 5. If I look, for example, on the PC, I look at market share on Steam or on the Epic Game Store. But then, of course, you have to go a little bit more into details, because Epic Game Store sometimes gets those exclusive deals. So when you say a game gets exclusive on Epic Games, but the market share of Steam Launcher or Valve is bigger, so they actually get the game more or less paid by Epic Games. Then we have the platform distribution. Revenue split across different platforms such as mobile, console, PC. Platform distribution shows diversification and can reveal trends in player preferences. Always good where the people actually play your games. Compare platform performance over time. Track changes to identify shifts in player demand and opportunities for expansion, like bringing your games to the iPhone. Esports presence, so the company's involvement in competitive gaming, like Call of Duty has this, or Fortnite, including sponsorships, tournaments, and viewership. So that Twitch, for example, or YouTube plays a big role there. Esports presence boosts brand visibility and can drive player engagement. Track tournament viewership, sponsorship deals, and player engagement metrics to assess esports impact. In conclusion, my friends, I'm going to read this now. In conclusion, analyzing a video game company requires a multifaceted approach combining financial, user engagement, game performance, monetization, and industry-specific metrics. Each metric reveals unique insights from a company's profitability and growth potential to user satisfaction and brand strength. By focusing on critical indicators like revenue growth, user retention, LTV versus CPI, and IP portfolio, investors and shareholders can gain a comprehensive understanding of a company's market position and future prospect. Very important. Ultimately, success in the video game industry depends on a company's ability to balance engaging gameplay, effective monetization, and efficient operations while remaining adaptable to industry trends and player demands. Guys, and now I come to my case study, so I hope you enjoyed this. If you enjoyed this already, please give me a thumbs up and write me a commentary. Say a nice comment. In a nice commentary, you can tell me if you actually like these kind of videos, if this helps you to better understand what's going on in the gaming industry market. So this is not only for shareholders interesting, but it's also for indie developers interesting, or for everyone that wants to learn about the gaming industry. But now we check a little bit from shareholder perspective against CD Projekt. So you see this chart. So it's set on max chart. This is it's trading basically sideways. If you would look from 2007 now to 2024, we see a form of consolidation here also. And an impact of major titles. You see Cyberpunk, Witcher was coming out, I think, in 2016. So stock was going up, and then Cyberpunk was coming, big announcement, and then problems with Cyberpunk. We reach a top and we fall, and then we had the bubble, the burst, and the share fell to like 80, 70 Polish zloty. So now we have new IP, new games, new Cyberpunk, new Witcher games coming. So now is the question if we go like this. So, financial metrics for CD Projekt Red in both Polish zloty and euro for the first half of 2024. So, based on the report they have on their website. Net sales, we have, let's say approximately 100 million. Cost of sales, we have approximately 30 million. Operating profit, 32 million. Net profit, let's say 40 million. Cash from operating activities, 60 million. So, gross margin, operating margin 33%, 20%. So this is for the first half of 2024. It's not for the whole year yet, but so we have to see if this changes over the whole year. But gross margin is already pretty good and operating margin is okay. Revenue and profitability. CD Projekt reported net sales of 98.6 million, reflecting strong revenue generation. This represents substantial year-over-year growth, showing the company's ability to capitalize on its product portfolio and maintain high demand. The cost of sales amounted to 29 million, resulting in a gross margin of 70.61%. This high gross margin indicates efficient cost control in the production and distribution of their games, allowing a significant portion of revenue to contribute to profitability. Very nice, great company. The company's operating profit reached 32.5 million, resulting in an operating margin of 33.01%. This strong margin highlights effective operational efficiency and cost management, which translates into a healthy bottom line. Additionally, the net profit stood at 39.4 million euros, suggesting a robust capacity for profitability, further enhanced by lower operating costs relative to revenue. Good to hear. So cash flow analysis, CD Projekt Red generated 58.2 million in cash from operating activities, a critical measure of its financial health. This positive cash flow demonstrates the company's strong liquidity position and provides flexibility for future investments, such as developing new games, marketing initiatives, or potentially acquiring new intellectual properties. This cash flow also reflects effective monetization strategies like, we have GOG, for example, GOG.com, and a sustainable revenue model, particularly from its existing game portfolio, so Witcher, Cyberpunk, DLC, etc. Overall financial health, the high gross and operating margins reflect CD Projekt Red's success in maintaining cost efficiencies while capitalizing on its games' revenue potential. Given that the company's company operates in a highly competitive industry. These financial metrics indicate that CD Projekt Red is well positioned financially. With strong cash flows and significant profits, it has the flexibility to invest in future projects, enhance its existing IPs, and expand its product portfolio. So for CD Projekt, the new Witcher and the new Cyberpunk and the other game, the other new game are very, very important. But the problem is here, we might not see probably until 2025 any new game. So this is, for example, then a detail we have to take into account as well. And they don't make multiplayer games. Conclusion, in summary, CD Projekt Red's financial results for the first half of 2024 demonstrate robust revenue growth, high profitability, and a solid cash flow position. These metrics showcase the company's ability to manage costs effectively and capitalize on its game portfolio, which bodes well for its future financial stability and expansion potential. This performance reflects CD Projekt Red's strategic focus on efficiency and growth. Efficiency very important and growth very important, because that's what we want to see as the shareholders, suggesting that it remains a strong player in the video game industry. That's the case study, my friends. So disclaimer. Do I have to read this, guys, or can you imagine? So, all right, before I read this, guys, I want to say thank you. And it's great actually to make those videos for you. And if you like my channel, if you like to watch this channel, you have to give me a thumbs up. And please share this video with your friends. Share this video with your investor friends. Share this video with your gaming friends, just that they understand how the gaming industry works. It's always good to know how the gaming industry works, especially if you are a gamer. So we all start as gamers, but then we become investors, then we become experts, and then at one point we make videos about how to analyze the gaming industry, how to analyze the gaming industry. So, but I'm not a financial advisor. I'm a YouTuber sharing information for educational entertainment purposes. The content in this video is based on my own research and personal opinions and it should not be considered as financial advice. Investing in any asset carries risk, so always do your own research and consult with a qualified financial professional, not me, before making any investment decision. Make sure to make informed choices based on your own due diligence. The information presented here was extracted using AI from official reports of the CD Projekt, for example. And while every effort is made to ensure accuracy, so I checked the numbers, I take no responsibility, my friends, for the correctness of the numbers or data presented, whether in the original reports, obviously, or as processed by the AI. All numbers should be considered as illustrative examples only, and viewers should refer to the original documents for verified figures, guys. So that's it. I hope you enjoyed this video, guys, and if you did so, I thank you very much, and I think you did a very good choice to spend your Sunday time, or whenever you watch this video, this half an hour with me. So this shows me that you really are on a good way, becoming a good investor for the gaming industry. So you really understood what is important for games, for the gaming industry, and in general in life. So thank you very much. See you next time. Bye bye.